Okay.
All right, guys. Good morning. We have a special treat for you today. We've got Rick Rule joining us. For a lot of you, you already know who Rick Rule is, I'm sure. But those of you who don't, you'll get a good taste of what Rick is about in this interview. He is one of the greatest resource investors ever. Supposedly retired earlier this year from Sprott, and I guess the way you title yourself now as a job title, you just call yourself a speculator and investor. Like that's basically what you go by, isn't that right, Rick?
That's accurate. And I would prefer to describe retirement as redirection. I was able to give up all aspects of employment, almost all aspects of employment that were unpleasant. I gave up my securities licenses as an example. So I'm no longer, regulated by the SEC or FINRA. And I gave up almost all of my managerial and administrative responsibilities, although I continue on the board of directors of Sprott, which has left me free to spend more time doing securities analysis and credit analysis, which is why I got in this business to begin with. It became odd, Matt, that my success caused me to distance myself from the part of the investment business which attracted me. And so I'm in a wonderful position in life. I've given up most of the stuff that gives me aggravation, and I focused on the stuff that gives me pleasure. I recommend that course of action to everyone.
That's great. It's great if you can do it. And there's a lot of different things I want to talk to you about today. Everyone always wants to ask you about specific stocks or how we think about silver or gold. And I think I want to cover some of those things. But, there's I really want to talk also about this idea of mentorship, because I saw you do a speech maybe 4 years ago, something like that, on mentorship. And I think that for people who have not heard you haven't heard this topic discussed well, that's something I do have a few questions about as well. So I know I didn't prep you for that, but
Great.
I want to ask you some questions about that too. So, but first, can I ask you a newsy item just to get your thoughts on something that came up just yesterday or just today? And this is
Try me.
The reverse repo market spiking to almost $1 trillion today. Does that mean anything? Does that
doubtless means something. I'm not certain that I'm smart enough to know what it means. It would seem that the Fed is using the reverse repo market as a way to manage the liquidity that they've added to the system. I suspect that the reverse repo market is the same sort of policy tool as yield management. Yield management being selling short-dated securities to buy long-dated securities to move the long-term interest rate down. You'll note that the Fed, as a consequence of more than adequate liquidity in the system and the relatively benign economic circumstance we find ourselves in the near term, has allowed credit markets to increase. And I think that the repo market, the fact that they're able to act in the repo market, is really a way that they put additional ammo in their quiver, should they need it, in the event of an economic slowdown. Reversing the reverse repo market could have the effect for them of managing intermediate term interest rates more effectively than they could do it, while at the same time continuing to stimulate the economy by quantitative easing, which is to say adding artificial liquidity. By the way, I'm a credit analyst. I'm not an economist. So everything you just heard is me making up an explanation to something that's very, very complex. I might have it right. I don't know.
Well, it is so complex, and I just think I don't know what to make of it, which is why I asked you. And it seemed like in November of 2019, the repo market was going crazy in the other direction, and now it's hard to understand what's happening, except for everything seems extremely chaotic in the financial world today.
I think that describes it. It's interesting that people seem to be as comfortable as they are with a situation that I can't believe they can understand, because I don't think it's understandable. It's odd, I think, Matt, that we live in a circumstance right now where literally millions of people are confusing liquidity, which is to say there's lots of cash in the system, with solvency, which suggests that we can service our debts with enough capital left over to reinvest to grow the economy. to match the increase in population growth. This sort of mismatch in people's understanding between liquidity and solvency. It's interesting to me.
It is. What do you think is the greatest risk to the system right now? I mean, obviously there's the huge debt load or whatever, but is there something that stands out to you as a, based upon your vantage point that you think could be the catalyst for something going bad?
I don't want to come across as a doom and gloom type pessimist, but there are so many things that make me nervous. Perhaps it's just that I'm an old man. The broad acceptance of liquidity as a substitute for solvency, I think, is a problem. The broad acceptance, too, of non-voluntary transactions, the idea that you have a right to prevail on other people, even without offering utility to them, bothers me. I had a house guest here last week, very nice guy, very bright guy, very accomplished guy. And we had the normal sort of anarcho-capitalist versus mainstream political discussion. And, he was talking about policy. And I said, just out of curiosity, how do you feel about coercion? Do you believe in your paradigms enough that you believe that you have the right to extort my wealth and constrain my free consumption? And he looked at me and said, absolutely. Now, it was nice because it happens so seldom that he was honest about the fact that his belief in his own paradigms was strong enough that he had the right to oppress me. And it made me admire him more, mostly when I have those discussions, and I have them all the time. Mostly when I have those discussions, I get the yes, but objection. Which is to say that they don't agree with me, but they can't refute me. If you tell a mainstream political thinker, often I ask the difference, is our current system a system of slavery or a system of extortion? In other words, if you're a slave from January 1st through April 15th or May, whatever it is, when you start working for yourself, because you're only a slave for 4 months, is that extortion or is it slavery? People on the other side, people in the mainstream, do not like that question. They accuse me of using extreme language. And I say, in the best Doug Casey tradition, no, I'm just using the words correctly. If it makes you uncomfortable, perhaps you should think through the way that you organize your life and the way that you would prefer to control others. At least this man was completely candid about the fact that he absolutely believed in extortion. And I asked him too, how he felt about the decision-making processes around extortion. In other words, if the majority believed in something, did that make it right? And of course, he fell for that bait right away and said, absolutely. And I asked him how he'd felt about Hitler, or more recently, how he felt about Trump. It would seem that when people that shared his point of view were doing the extorting, that extortion was good. And with Hitler, he was so flustered that I actually got the yes, but objection from him, which made me ironically very happy.
I mean, it just seems like this descent into tribalism is the thing that is leading things rather than any philosophical context, that there aren't really philosophical ideals or even a moral compass anymore that's leading people's decisions.
The world is a strange place right now. When I visit with my own ilk, which is to say old, bald, fat, white, rich guys, I become very pessimistic. But when I deal with the Reddit crowd, when I deal in my mentoring life, when I deal with Students for Liberty, 160,000 libertarian kids worldwide in universities. And I think back to when I was their age, I couldn't spell libertarian. So I'm actually pretty optimistic about all these things. I remember a wonderful Doug Casey quote saying it would be fascinating to see the way this thing all played out from somewhere else on a broad screen TV. And there is a bit of that. But in truth, I have a whole bunch of comments to that, Matt. I continue to believe that our individual creativity and tenacity and the basic goodness in most people is such that somehow we find a way with our individual creativity and work to finance our collective stupidity. 5 or 6 young kids get together, commandeer a garage in Sunnyvale, California, and out pops Google. It's odd that when we work in a voluntary basis, when we create products that serve a need, we generate so much wealth that we can finance the stupidity with which we vote. And so I actually feel pretty good about that. I certainly believe there's going to be some volatility as these two forces work themselves out.
Right. Yeah, I do too. And I think, and one of the things I wanted to ask you about getting into the mentoring stuff a little bit. And by the way, Doug, just interrupt me anytime I'm talking if you have something to say, because I want to make sure. I know you and Rick have a long and storied past history together. So some interesting topics could come from that. But I think that I wanted to ask you about all of these new young people that have come into the financial market in the last seemingly like 5 years, and I think it's the Reddit crowd, the tools like Robinhood, maybe having, the fact that sports betting is illegal, but like Robinhood is trading is free. Maybe it's those kinds of things that are driving part of it. But I just want to see generally what your thoughts are about these people coming in, and maybe some advice for young people who are entering the markets and really kind of, buying into these meme stocks in particular. I mean, the GameStop phenomenon was very interesting, I thought. Then there's this silver squeeze effort that's, done by that crowd as well. And crypto, of course, is a big thing that these people are generally into too. What do you think about all this?
I think it's all for the good. I think that these young people, like most young people, are going to get spanked. That's going to happen. I effectively went broke when I was a kid, so why should they be spared the real tuition that's associated with learning how to invest? I've talked to a lot of them. Obviously, the silver squeeze works to the benefit of Sprott. One of the expressions of the silver squeeze has been that many of the Reddit crowd have bought shares of the Sprott Physical Silver Trust. And the consequence of that is that we've been the largest buyer of in-system silver in the world. So it's benefited me. But I've wanted to learn from these young people, and learn I have. I likely, if I was willing to short businesses that I would have didn't understand, pardon me, I would have been short the entertainment stocks too, on a net present value to enterprise value basis. But these young people invented, if you will, or not invented, they identified an investment thesis that I was less familiar with, which was stock to float. They figured out that the rational thinkers had shorted more of the securities than were available to cover. And they engineered a short squeeze of rather epic proportion. I hadn't understood that stock to float, either for Bitcoin or Ethereum or for these stocks, was actually a speculative fundamental. But in fact, it was. There are allegations, which I'm sure Doug will refute, that I engineered a few short squeezes myself in my past. And I can tell you that, were I promoter, there is nothing I would enjoy larger than a good short position around a stock I liked. If you have a big short position around you, you have a bunch of buyers. It's up to the market whether they fill higher or lower. So I understand perfectly the game these youngsters were playing, and I applaud them for figuring out a trading strategy that escaped an old man who spent his whole life investing and speculating. And the discussions that I've been able to have with these young people have been spectacular. There is an ill-defined anti-authoritarian bias, a hostility towards Wall Street. Given my experience, that hostility is well-founded, and a hostility towards the status quo. Again, an ill-defined and unformed hostility, but I think it's very healthy. I think it's extremely healthy, and I have found that younger people are much more receptive, particularly in a Socratic fashion, to discussing things like coercion, extortion, discussing the foundations of the way power over oneself or one's community is distributed than people my age. So I think that Reddit is good. Will a bunch of these kids lose all their money? Yeah, absolutely, positively. A bunch of them will lose all their money, just like I did. And it's good to get the scars out of the way early. It's good to lose $3,000 when you have a $5,000 net worth, rather than losing $300,000, particularly when you have a $250,000 net worth. So I think it's great.
Yeah, I think it's good too. I mean, one of the things that I worry about that they do have this ill-defined or not well-defined view towards authority, which I think is very positive. The skepticism toward, the suits and stuff like that. I love all that, but I worry that that it could be filled with some other solution. The drive towards like believing that more socialist policies are the solution instead of believing, that an individual responsibility and that kind of thing, that's the answer.
Matt, this is a fair fight. When Doug and I were young men back in the Paleolithic, information was distributed from the top down. It came from the academy, it came from government, it came from very large media conglomerates. But information is much more ubiquitously distributed now. And there are, as Doug used to be fond of saying, 10,000 points of light, which aren't necessarily muzzle flashes. Because of discussions like this, you have seen broad policy discussions democratized. Interest in the New York Times point of view, as an example, their market share or mind share has fallen really dramatically because the discussion has become distributed. So you have as much opportunity to engage in dialogue with these people as the World Economic Forum does, as the big thinkers do. So when I say it's a fair fight, what I say to you guys is, let's get it on. Let's have that fight. There's a whole broad audience out there listening, and you don't have to write an opinion piece for the Washington Post or the Wall Street Journal to access them.
Doug, what do you think about how you fill young minds with the right ideas? What's the best way you found in exposing people to this stuff?
For me, the mentoring process has become increasingly Socratic. I used to mentor based on the old Xerox learning system, public speaking. Tell them what you're going to tell them. Tell them 4 things. Tell them what you told them and ask them to do something. And that worked relatively well because I'm a good public speaker. Lately, what I've learned is that if people come to me, it's because the circumstance that I believe in is likely lurking within them anyway. They found me. They didn't find AOC. And I think that assisting young people, by the way, very much like Doug assisted me in the middle part of the decade of the 80s, finding my own philosophical beliefs. He didn't do it by cramming Hayek or von Mises down my throat. He did it, I don't know, Doug, if you remember this, he did it in conjunction with Jack Pugsley by gently asking me a series of questions. And he was able in about an hour to, very painfully for me, point out the contradictions in the way I think. I was a political pragmatist, which is to say what was good for me was good for the world. And so I think the way that we engage in dialogue in today's environment is to put out positions which make our point of view fairly clear to the world, attract an audience that's curious about that position, and then allow them gently to articulate their own beliefs from a Socratic background. Rather than answering questions, ask questions. Well, I'm experimenting with this, by the way. This is by no means a complete project. This is very much a work in process. But now I have some time.
Well, that's the way that certainly I was brought over to sound philosophical thinking, was Doug's Socratic method of asking questions. I mean, Doug, what's your recollection of that meeting or that time with Rick and Jack Pugsley? What do you remember about that? And
listen,
at the time,
I've always enjoyed hanging out with Rick. and of course, Jack Pugsley too, especially in the hot tub where when we get into any kind of a philosophical subject, and Jack would like to start with the formation of the planet Earth 4 billion years ago and build a foundation from there. That was his methodology. He was like, he looked like Grandpa Smurf, and he had exactly the same persona. You know, he was really just a kind guy. But memories fade, and I wonder how many people recognize Jack Pugsley's name at this point. In fact, I wonder how many people recognize Harry Brown's name at this point. In fact, I wonder how many people are going to recognize any of our names in a few years as the parade marches on. So maybe this is one of the reasons why, more than Rick, being an optimist has served Rick very well. But philosophically, I'm kind of a pessimist. Well, I'm both. I kind of think the future is not only going to be better than we think, but probably better than we can think. I'm stealing that from J.D.S. Haldane, who said that. It's a really good quip. But at the same time, I think it could get really, really ugly out there, especially in the next few years. I mean, so I go back and forth. I go back and forth on all these things. But Rick, that was interesting that you were talking about the guy that you had over, and the way he displayed his colors. He wasn't pretending to be something that he wasn't. And like yourself, I agree. I'd have to compliment him for his intellectual honesty and having thought about the subject enough to know exactly what he believed, as opposed to just saying something that appealed to most people. But actually, saying who he was and what he believed. That's pretty rare. Although I've got to say, don't you find it's kind of dangerous potentially dangerous hanging out with a guy who's, even if he's intellectually honest, is clearly a member of the enemy camp from the point of view of personal freedom?
Yeah, I try to regard them as unconverted as opposed to enemies, Doug. At at age 68, I have to choose my enemies wisely. I've generated so many of them over my life. And I think I'm ill-advised to go swatting at sort of hornet's nests. There's lots of hornet's nests. And at 68, I run less well than I used to. So I would prefer to regard this guy as unconverted.
That's good. And I don't get into arguments with anybody, even if, I really prefer, listen, I like pleasant discussions with people, even people that believe the opposite of what I do. But what I'm saying is that, people that, have these statist and collectivist beliefs, sometimes, in fact, very often, that's built on a foundation of how they view the world. It's not just, some random views. I mean, maybe they're bad people. I
think a lot of people, Doug, really, I think I probably side with Rick on this a little bit, where I think that most people just have not been confronted with the thinking deeply about these subjects. Most people haven't. And then and I believe that most people do intend good. There are evil actors out there. There are people who do, I think, are evil actors, but I think most people actually are doing what they think is the good thing to do. And it's the problem in their head is that they don't, their judgment about what is good and what is bad is off. And it's usually off at some foundational level, like you're saying, but through good questions and good answers. And especially with, this is why the Socratic method works so well. Because if you made a statement to them, the defenses come up right away. But if you ask them a question, they go back and they search in their head, and they will begin to form, build bridges that didn't exist before that, I guess. So that's why I love that method. And you're the best at it that I know, Doug, honestly. And I'm awful at it. I'm trying to get better. But Rick, with the mentoring thing, I think it's really, I only heard you talk about this one time, but you had it so well formulated and thought out. And I have people asking me all the time, come to me wanting mentorship, and usually they don't really know exactly what they want. And usually I'm not clear why they're actually even asking me versus somebody else. But you've found great mentors in your life. You've mentored great people in your life. What do you think is the key to making it actually work properly?
First of all, it's hard work. The person being mentored needs to be responsible for initiating the transaction. And he or she must have a much better plan than they believe. They have to select the mentor correctly, and they have to give the mentor a job description. It's going to change as time goes on, but you have to build a process. And building a process without a plan is just extraordinarily inefficient. I probably say no to 9 people out of the 10 that approach me, because what they want is so ill thought out that it's unlikely that I will be able to do as much good as I sort of require myself to do in the time I have available for that. Sometimes I'm able to redirect the person questioning me to somebody who can suit them better. For people who are listening and are interested in this, if you Google Rick Rule and mentoring, I've done 2-hour-long videos, one of which was done for Liberty.me some years ago, but is still available. And I think the other one was on capitalism and morality.
Yeah,
but they're both broadly available, and they don't represent today's thinking, because today's thinking is much more Socratic. But both videos, I think, do a good job of discussing the processes and the roles and responsibilities in a conventional mentoring format.
Well, and I agree. I'm just, as you were saying it, I mean, I describe Doug all the time as my mentor. And so I've created this little video series as a way for me to learn. I'm hoping that other people learn along the way, but I get the opportunity to learn every day that Doug and I have these conversations. And I gave him a job description. Here's what we're going to do. It'll only be this long. We'll do it daily if we can, but if we can't, it's okay. And I'll do the work in trying to figure out what we can talk about, and we'll take it from there. We'll see how it goes. So
you're to be congratulated for that. What you are doing is addressing a problem that you brought up earlier in the interview, which is how do we win the war for minds? And precisely because this discussion becomes so broadly disseminated through the web, what you're doing addresses in real time and in real fashion the problem that both of you earlier had identified. So you're to be congratulated for it.
Well, thank you, Rick. I got to ask you about gold and silver now, because that's a big thing that everybody always wants to know about with you, because such an expert. What do you think about both the metals markets themselves now and the stocks, the gold stocks and silver stock markets?
Matt, I'm in a strange place of owning more gold and silver than I rationally should own, because so much of my financial life is tied up in the mining business. It's arguable that I don't need to own any physical precious metals, but I do. I own them because I appreciate the need for liquidity, and I believe that gold and silver represent good, if volatile, liquidity. I'm in the odd position of owning a bunch of that I hope goes down in price. I say that for 2 reasons. Precious metals through history have been, call them social catastrophe insurance. Maybe that's a little strong, but they tend to do well during times when conventional financial instruments and conventional financial arrangements are in disarray. I'm old, fat, bald, happy, rich. I'm not looking forward to a circumstance that features a bunch of disarray. I'm old and slow enough that if somebody chased me, I'd have to stand and fight, because I can't run that fast anymore. So I'd prefer a circumstance that was all sort of mellow, but I don't think that circumstance is in the offing in the next while. With regards to the precious metal stocks, I think they're at present a very interesting asset class. When you study prior gold bull markets, what you will see is that the malaise that we've seen in precious metals markets in particular in the mid-cap precious metals equities is very historically consistent, pardon me, with prior precious metals bull markets. There is incredible cyclical volatility within a secular bull market. I remember well in 1975, the gold quote had run from $35 to $200. Admittedly, the start was price controlled. So, you know, you had a six-fold move in 5 years. Everybody got real courageous and was way long gold. Then they allowed the US interest rate to go up. The gold price fell from 200 to 100. And all the people who were attracted to the narrative because of momentum got shaken out just in time for gold to go from 100 to 850. So the circumstance that we're in today is normal and natural function in a gold bull market. And I see it as a wonderful opportunity for me personally. I believe in the first instance that precious metals will do well for a variety of reasons, but they'll do well particularly because the yield on conventional financial instruments is negative. That's not a force of nature. I believe that quantitative easing, which, Matt, if you did it, would be called counterfeiting, damages the integrity of conventional financial instruments. I believe that credit quality, which is a fancy way of saying debt and deficits, compromises the integrity of conventional savings instruments. I believe particularly that negative real interest rates damage it. Think about a negative real interest rate. Think about paying somebody to consume your money for you. In my whole life, the US 10-year Treasury has been the security against which others were priced and measured. So let's look just for fun as a proxy for saving. The 10-year Treasury, its yield is about 150 basis points, más o menos today. And its purchasing power, not according to some cranky old libertarian, but rather according to the Congressional Budget Office, is about 4.5% negative. So you get 150 basis point yield in a currency that's depreciating by 450 basis points a year. This is the first time in my career that the government has absolutely told me the truth. They're telling me if I give them money today, they'll give me back less. In fact, they're guaranteeing it.
They're just exaggerating how much less. They're not telling the whole truth. But
I mean, Jim Grant calls this return-free risk. So what precious metals are competing against is return-free risk. And then there's market share, and people don't look at market share. Maybe this is what I learned from the kids, the Reddit crowd, but, float to Bill. Precious metals and precious metals related securities have about a 0.5% market share in terms of savings and investment products in the US market. Their 2-decade mean is 1.5%. Precious metals don't need to win the war against the US dollar. They just need to lose it less badly, or they need to revert to mean. And my belief is that as long as we have quantitative easing, the debt and deficits, and negative real interest rates, that we are moving inexorably towards a circumstance where the market share of precious metals and precious metals related assets reverts to mean, which means that demand for them triples in the largest savings and investment market in the world, which is what I think is going to happen.
Is there a catalyst that typically drives that reversion to the mean? I mean, is there something
maybe, but I think that the search for catalyst is too much like believing Agora direct mail marketing. The world's going to come to an end 6 weeks from now, and here's how you can profit.
Yes.
I think it's a simple arithmetic. That answer is really boring. So it doesn't sell newsletters. It doesn't generate commissions or fees. But I think the overwhelming weight of arithmetic is what will take the precious metals prices higher. It might be that arithmetic expresses itself in something dramatic, which is, of course, what everyone looks for. But I think rather not. I think it's a process that isn't narrative driven anywhere near as much as it's arithmetically driven.
Well, and we are in a world of narrative investing, though. It does seem, at least that is the dominant theme today, that everything is theme-based. And
Yeah.
the younger crowd, the Reddit crowd, are big into the narratives. And what do you think, what has been their impact, do you think, really on, do you think there'll be a significant contributing factor to the precious metals?
I do. Yeah, I absolutely do. Because nothing justifies narrative like price action. People look at the narrative around gold at $1,700 and it's interesting to them, but GameStop is going up.
Right.
People look at the circumstance that they're in, and we all believe that we're fact seekers, which is horseshit. What we do is we look for information around the world and we codify it in ways that are comforting to us. If the gold price were to go from 1,750 to say $2,500, the fact that it was less attractive arithmetically, which is to say the fact that the cover charge was higher, would be lost because the narrative would have been justified by the price action. It's odd. Doug and I have had this discussion for years. If you go into a store and buy a can of tuna fish for $2, good value. You go back next week and that same can of tuna fish is $4. You substitute for canned chicken. But when somebody buys a share of stock for $2 and they go back to the brokerage house 2 weeks later and it's $4, they're real excited and they want to buy more. Although if nothing's changed with the company, it's arithmetically half as attractive. Conversely, if you go back to the store and the tuna fish is $1, you load up the car. You buy cases of the stuff. It's just cheap. But if the $2 stock goes to $1 and nothing has changed with the company, arithmetically, it's twice as attractive and you sell it in disgust. Mercifully, understanding that has allowed me to make lots of other mistakes in my financial life and still come out ahead. It's that realization that money is made on the delta between arithmetic and narrative that has worked for me.
Do you think it's your credit analyst background, that really gives you that core foundation?
Yeah,
there?
Absolutely. And the other thing is I'm rich now, so I have no fear of missing out.
Yeah.
If something goes up that I don't understand, I don't care. I used to give a lecture on errors of omission and errors of commission. An error of omission is money that you didn't make because you didn't understand something or you didn't participate. But not making money is the same as losing money. Losing money is an error of commission. That's where you take money and you put it into something you don't understand and you get your ass kicked. Errors of omission are okay, and errors of commission are a sin from my point of view. And that probably does come. I mean, it comes from two things. It comes from a consequence of the fact that I don't, although I enjoy it, have to make money anymore. So I have zero envy in me. But it also has to do with a very strong sense that my own small fortune has been made from arithmetic. Soros said, that you generally make big money by finding a broadly held precept that's wrong and betting against it. And there are opportunities every now and then where you have the circumstance to put that into practice. So that's what I try to do.
A lot of people give up because of the price action, though. And I know we had people, just even a few months ago, as the gold stocks had kind of, they had a little bit of run and then it was pulling back, or it was pulling back. And people were like, I can't believe, with all the markets going up, I can't believe this is happening with gold. And one of the viewer asked this question to Doug, and Doug's answer was, who knows why the market is moving up or down? Like nothing's changed, gold is still, it's a better deal today than it was before. I like it more today than I did yesterday, but the price action is meaningless.
Well, I think that's absolutely right. By the way, you're not going to get everyone right. Life is about probabilities. People want certainties. And oddly, people think that what they want matters. I'm completely disabused of that myself. I know that what I want doesn't matter. It's what can I have, at what price, and can I afford to pay it?
So, when you talk about the price action thing, price action does often seem to be a catalyst, though, to a market beginning to move, because I was thinking some other a guy who knows a lot more about crypto than I do told me in 2015, late 2015. I asked him specifically, I'm like, what do you think it's going to take for, Bitcoin to start to move again? And he said, well, just got to get a price above 1,000. The price gets above 1,000, everyone's going to be interested again, and it's going to go up from there. And he seemed precisely correct, in the way that actually worked out. The price action drove up the interest, which then has driven it further. But yeah, so I guess so if the price action ultimately, it does have to start to move in the right direction in order to draw the interest in for the asset to go up in value, right? I mean, obviously it has to happen.
Yeah, I think that's right. And I think Doug can tell you most of the time when I've been right, and I haven't always been right, of course, but most of the time when I've been right, I've been way early. The arithmetic has attracted me, and the arithmetic has attracted me precisely because something was so deeply out of favor. I had a wonderful experience 20 years ago, I guess, in the uranium market. And it's arguable that I was early, 4 years early. 4 years early at an 8% discount probably isn't early, it's probably wrong. But when you're as right as I was, when the stocks do as much as they did, they can pay an awful lot of rent. I think people need to define the investing and speculative strategy that suits who they are well. I'm not particularly interested in trading. The idea that I buy a 75-cent piece of paper that through some promotional magic goes to $3 or something might be intellectually interesting to me, but understanding the impact of a narrative on a broad crowd, I don't go to movies. I don't know how to dress myself. This whole idea that I'm going to be able to trade a narrative it doesn't work for me. There are other people. I think of Doug and my mutual friend, Frank Justra, who understands all about monetizing narrative. I mean, he's a genius at it. I think Marin Katusa is a genius about it. Our old friend Bob Bishop was a genius in that regard. Journalists really at heart. I'm not. I'm a loan shark, It's a very different mindset.
Yeah.
So Rick, what do you think about uranium today? I mean, that was a wonderful time for us. What do you think about it today? Down from 140 back to $30. And of course, those $30 are worth less now than they were. In fact, what was it, $10 when you first got on it? And I wrote a long paper on it and all this type of thing. So $10 today is like, then is like $20 today. It's about 30. So what do you think?
Well, you have to.
Back then, there were only like 5 publicly traded uranium stocks of any consequence. Then before the bubble burst, there were about 400. I don't know.
So let me write a little Agora copy for you right now, just to get the viewers horny. At the beginning, you wisely remember that there were 5 uranium juniors in the universe that had survived a 20-year bear market. In the ensuing 6 or 7 years, the worst performing of those juniors went 22 to 1. The best performing of those juniors, which you had the good sense to recognize and recommend, went from 10 cents to $10. So that's why people should care. The circumstance now and then is different. One part of the circumstance is the same. The price of uranium in the spot market at $30 a pound means that the whole industry is in liquidation. The incentive price for uranium, the fully loaded cost of uranium, that includes management and administration, legal fees, prior year write-downs, cost of capital, is more like $55 a pound. So you make the stuff for 55, you sell it for 30. Being a miner, you make it up on volume. You lose $20 a pound and you do it, 70 million times a year. Pretty boring. But that's the attraction. The attraction is, despite the fact that Biden might not like it and Greta doesn't like it, that people around the world, when they walk into a room, they want the lights to go on. That's what they really want. They want the lights to go on. And if the lights go on without generating carbon, so much the better. So when people ask me, will the price of uranium go up? I say, well, if you believe that 6 years from now, if you're in the US and you flip the switch that the lights will go on, then yes, the price of uranium will go up because 20% of US base load demand and 14.5% of total US electrical demand is uranium. And if the price of uranium over 5 or 6 years doesn't rise to the cost of production, including the cost of capital, the lights go out. It's pretty simple arithmetic. The problem, if there is a problem, is that we're in such a narrative and liquidity incented environment right now that the price of the junior uranium stocks taken as a whole already discounts $60. Doug, one of the reasons that we enjoyed those insane gains 20 years ago, and they were insane, it gave us way more than we deserved, thankfully. But you'll remember in Paladin, we started with a 2 million market cap. In international uranium, we started with a $20 million market cap. Now you're starting with 250 and 300 and $400 million market caps. In the case of NextGen, which is arguably the finest, you're starting with a $3 billion market caps. These are non-producing juniors. So from my point of view, what I would like to see to get more involved would be that the price of the uranium juniors would fall by 50 or 60%.
Well, do you
that
think
would take most of the new adherents and send them to adherent heaven. But the arithmetic would return to the trade because for sure the price is going to go up. There's just no arguing that the price is going to go up. The difficulty is in the sector of the market that I like the most, which is to say the juniors. They're just selling for too much. I look at these juniors, I think, that stock could triple. Well, I think Kazatomprom could triple too. It's the finest uranium company in the world. It has the best pipeline. It has the lowest cost of production. It has a great balance sheet, and it pays me almost a 5% dividend while I wait. So time value of money. So would I buy myself a package of 10 juniors, which I think could triple? Or would I buy myself Kazatomprom, which I think could triple? The arithmetic to me is not very exciting, tells me Kazatomprom. Mercifully for me, Kazatomprom is a Kazakh stock that trades on the London Stock Exchange. And many people don't have access to the London Stock Exchange. Commercial here. If you don't get a better broker, think Sprott. And many people don't want to buy a company in Kazakhstan because they don't like the political process in Kazakhstan. I don't like the political process in Kazakhstan, but I don't like the political process in Canada or the United States either. So, for me, this is a fairly straightforward equation.
That makes a lot of sense. And I completely agree. Does that mean that you're much more interested in gold stocks right now, therefore, than you are with?
I am not so much the penny dreadfuls, where you and I used to hang out all the time.
Yeah.
Because the penny dreadfuls are ahead of themselves too. The private placement market is the worst I've ever seen it. It's way, way, way overcapitalized. Management teams believe, as do investment bankers, that warrant is a pejorative word. Somehow they've made warrant a 4-letter word, which is the only reason why one would participate in a private placement. So I'm priced out of the part of the market that has served me the best. But in particular, the single asset producers among the mid-tiers, the $1 billion, $2 billion, $4 billion market cap space, if you juxtapose enterprise value against net asset value and using the forward strip for the gold price or silver price, the mid-cap sector in the precious metals equity spaces is the cheapest I've ever seen it in my career. The juniors are overpriced. The seniors are fully priced if you're using today's precious metals prices as the denominator. But the mid-tiers are historically, pathologically, not pathologically, that's too strong a word, but they're more attractive than they've ever been in my career arithmetically. And I think the precious metals prices are going up.
Are there any names in that space that you were particularly fond of?
Yeah, your listeners are going to hate the names. The ones I'm attracted to most are Polymetal and Polyrus, both traded in the London Stock Exchange. They're both Russian. But if you don't want the best of the best, and you want to trade that for being politically correct, the mid-tier Australian producers, the Northern Stars, would be an example, or New York Stock Exchange, Kinross, I think is attractive. I look for companies that are generating lots of free cash flow, that have good development pipelines, that have at least one tier one asset. Definition of a tier one asset to me is $10 billion in situ recoverable resources and reserves at today's gold prices, where they're in the best decile worldwide in return on capital employed, and the best decile worldwide in all-in sustaining costs. And the fact that there's 10 or 12 companies on our buy list is really unheralded. You look at these companies generating, in some cases, 60 or 70% operating margins with a 10-year reserve life, minimal debt levels in a commodity that you think is more likely than not to go up. Attractive proposition. At the same time, you look in the penny dreadfuls and you see companies that don't have any reserves or resources at all, that are spending $10 million a year on exploration, but only have $8 million in the bank, and they have $60 or $70 million market caps. People ask me all the time, Rick, what would be the impact of $3,000 gold on, amalgamated moose pasture mines? And I have to say, well, if the price of something that you don't have any of something that you don't have any of goes up, it shouldn't really matter, except in terms of perception. Remember that amalgamated moose pasture is looking for gold. They don't have any gold. And I'm an exploration speculator, but I'm an exploration speculator in $5 million or $10 million market caps with good explorationists and a full warrant. I'm on strike when the management team is a butcher, a baker, and a candlestick maker, and the market cap is $100 million, and there's no warrant, which seems to be the circumstance I find myself in today.
These are words of wisdom. I hope everybody's listening. And we got time for one more area that we ought to talk about: oil. Nobody wants to talk about oil today.
What a cinch. I mean, what a cinch. Not as much as a cinch as it was a year ago. When oil was priced at $20 a barrel, you take the uranium math, and the oil math was on steroids. It cost the industry about $50, $55 a barrel to make the stuff, fully loaded. I'm not talking about listing cost. And you were selling it, well, for a little while for a negative return, but for a long time at $20 a barrel. So you make it for 55, you sell it for 20, you lose $35 a barrel, and you do it 90 million times a day. 90 million times a day. The industry as a whole is losing what, $2 billion, $2.5 billion a day. Now, ask yourself, 5 years from now, when you go out to the garage and turn the key to the right, is your car going to start? Yes or no? If your car is going to start, that means the oil price is going to go up to $55 or $60 a barrel. This is really, really, really simple stuff. Greta notwithstanding.
How dare you?
So, and even today and I kick myself for missing Exxon. I really, truly kick myself. I thought it was going to get cheaper, which is the dumbest thing in the world. When it got, kicked out of the Dow 30, it got kicked out of all those index funds. That was a temporary phenomenon. You're taught to look for temporary phenomenons, marking bottoms. I missed it. But if you look at as an example, Canadian mid caps today, they're discounting $40 or $45. Yes, the prime minister doesn't like them. Yes, our president doesn't like them. Does that matter? Not a bit. I mean, not a bit. If you believe that these prices are going to hold, and I believe that these prices are going to hold, these things on a free cash generation. By free cash, I mean cash above the level of sustaining capital investment necessary to maintain production at record levels relative to enterprise value. So I'm really attracted to the space. And, now that I'm an old guy, although I don't need it, I like the dividend yields. I remember, Doug, you taught me a wonderful phrase, which I've stolen for years. Earned dividends are, quote, Doug Casey, you may have stolen it too, outward manifestations of inward grace. I love that phrase.
I stole that from my misspent youth in Catholic schools, where That's right. An outward sign of inward grace. That's right.
Yes.
Sister Mary Joseph something or other.
Well, I suspect that she wasn't referring to oil stocks, but that notwithstanding, it's a very useful quote.
That's great. I know you have to hop on another call, so but Rick,
I need to do one thing, if I might.
yes, please.
One of the things I love to do is if the listeners on a call have enjoyed what I have to say and want to know what I think about their resource stocks, I encourage them to find out. If you go to a website, sprottusa.com/rankings, you can list your natural resource stocks. Please no pot stocks, please no tech stocks, please no cryptocurrencies. I'll personally rank them 1 to 10, and I'll comment on individual issues where I think my comments might have value. In addition to that, I'll send out a 50-year Barron's Gold Mining Index chart for the gold equities, which is the longest running and most inclusive gold equities index I have, not because I'm a technical analyst, but rather because it's a wonderful visual aid to understanding the anatomy of a gold bull market. And I'll send, for anybody who cares, a 100-year Goldman Sachs commodity chart, which looks at the pricing of commodities relative to other asset classes going back 100 years. Commercial's over, sprottusa.com/rankings.
And I will link to that in the description, and I encourage everybody to do it for sure. Sign up for it.
That's a sweet deal, and it's free. So do it.
Free. I mean, it couldn't be overpriced, Doug.
All right. Well, thank you very much, Rick. I appreciate it. Hopefully you'll come back because we're just getting into, I think, a lot of great details. So
I look forward to it. I'm going to institute my own interview series. So turnaround is fair play. I'll have you guys on mine.
That's great. You're not going to be at Freedom Fest this year, are you? Or are you?
I'm not. I'm not. I'm fond of Freedom Fest. I'm fond of Mark. I supported it when it needed my support. It doesn't need my support anymore. So.
All right. Well, we'll leave it there, guys. I'm going to go ahead and call now. Thank you very much. Really appreciate it, Rick.
Thank you, sir.
Thanks, Rick.